All right, this is the Global Empowerment Team. We are once again back at you and providing you with another show with a wealth of value, wealth of value and information. And today I don't have my co-host Khalil Macklin with us. However, he is with us in spirit. So this is, if you've watched a number of our videos, this is normally when we introduce ourselves and talk about our day and talk about our time in our gardens. It seems like that's one of the things that's given a lot of people time to do with working at home, and COVID is starting gardens and working in their gardens. So that is how I started my day off today. I did get a chance to work out in my garden and enjoy somewhat of a clearer day. And that's one of the topics we're going to talk about today is what's going on, in here in Northern California. With fires and the air quality, and tie that into what our mission is educating our audience on how to take care of our wealth and how to take care of our investments. And today we have a special guest who's going to inform us on how to make sure that in case of an emergency situation like what we're going through right now with the fires, that we are protected, that our assets are protected, that our wealth building tools are protected. So with that, I want to go ahead and introduce our guest today, Sofias Poni. How are you today?
Good. How are you doing, Benny?
Great. I'm going to read your bio in a second, but like I said, I just wanted to give you a moment. How was your day today?
A nice Thursday. It wasn't so busy. So it's actually been kind of weird because these last couple of weeks have been just flying by, super busy, of course, with everything that's going on. So the insurance world is a little, turned upside down sometimes.
Right. Yeah, that's one of the things, a lot of entrepreneurs are more busy now with stay at home and COVID and all these other things going on than we have been over the last, well, actually this time last year. So,
right.
That's one of the things I always say, it's opportunity in any situation. So with that, I'm going to go ahead and introduce two others and kind of go over your bio. So Sofias Poni, agency owner and CEO of Poni Insurance, an agent for Farmers Insurance. She has worked over 9 years, has 9 years experience as a small business owner, over 25 years experience in sales and customer service, and have a 5-star rating. Anyone that knows her will agree that she is passionate about what she does and takes the time to explain how insurance works. She is thorough, concise, and always offers friendly service. As a farmer's agent, she will help you identify the insurance coverage that best fits your needs with her precise, straightforward, and personalized suggestions that help make you smarter about insurance. She has the knowledge and experience to help you better understand your coverage options, whether that's auto, home, renters, business, and life insurance. She has also been a guest speaker on YouTube podcasts and additional webinars offering insightful education and tips about insurance and financial literacy. So with that said, thank you again, Sofias, for making time for us today. We want to go ahead and dive in. So just a little bit about you first. Obviously with your passion and your experience, they both coincide with each other. And with that, it said, you obviously found your niche, you found your passion, you found what you love to do since you've been doing it for so long. What steered you in the direction of insurance? What made you get into this business in the first place?
It actually was just kind of a fluke. I own my own business. We resold IT hardware and software here and in England, and the quoting system kind of changed. So we had to pivot and change because we weren't getting all those quotes. We weren't getting that much business anymore. So I decided to just, look for another job. And customer service has always been my forte. And there was a farmer's agent that was hiring just down the hill from me. And decided to, see how it was. And, not having insurance background at all, not knowing anything about insurance, like, the average Joe. Just thinking, it's a bill, it's something we have to get into. But man, my eyes just like totally opened once I got into it, of how beneficial and interesting it is.
Great. So getting into the business by fluke, by happenstance.
Yeah.
So obviously there was a epiphany there. There was an aha moment with you, obviously putting your foot first and taking the option of finding out a little bit more about insurance. What was your initial big ahas that kept you in the business for so long?
Life insurance. I mean, that's huge. Growing up in Eastside San Jose, with my community is Black and brown predominantly, not knowing how life insurance works. You know, a lot of us grew up with our parents just saying, you know, throw us in the backyard, it doesn't matter, and not understanding anything about generational wealth, not understanding how you use life insurance to to take that money out, cash value tools, you know, and use that to purchase a house or put your kids through school, or just use it as a lifelong type of you know, moments, right? That you can invest in your own self. So we didn't know about that. We just knew traditional ways: put it in the bank, put it underneath your mattress, you know, and get a loan. All these traditional ways. So just really understanding that was like the aha, like, oh my gosh, if I would have known this 20 years ago, I could have invested so much money. I'd have a couple farmers agencies by now. But you know, I think that was the real aha moment, and me just always wanting to give back and make sure that my community that I came from and other Black and brown communities really understand the value of life insurance. It's not just for death. It can be used as a living benefit and generational wealth.
Very nice, very nice. That's one of the things that we've talked about a number of times here on this show, is understanding that insurance is a tool. It's not necessarily just there for when you get into an accident or when something bad happens,
Right.
but it's a wealth building tool, strategy to protect those assets and to build that and to continue to build your wealth. So I'm glad you touched on that. So obviously you owning an agency and been in business for so long, you know the ins and outs of how to utilize this based on what your clients' needs are. So before I want to get into what does that first initial conversation look like for a client that's reaching out to you and they want to build wealth, they want to build out their generational wealth, and they want to start investing and investing in themselves and in their family? What does that initial conversation look like?
So basically for me, it's, you know, as an asset manager, risk protector, you know, I want to know, what assets do you currently have? And what are we trying to protect? Because that's what insurance is all about, first of all, right? Home, auto, umbrella policy. We need to start right there in just a small part and make sure that the assets and everything that you're trying to build upon, that we first protect those, right? That doesn't get lost in liability issues. Second thing is to say, where do you want to go? And then age comes into a factor, you know, the money that you have and what retirement really looks like for you down the road. So it's going to be a lot different when you're 25 and you're working at Google, you know, say last year, and, you know, versus you being 45 and saying, I don't even have a 401k. You know, I haven't put anything into this and I really don't want to work after age 65. So just kind of going backwards, I guess, you know, and saying, okay, if I really only want to work till 70, right? The last day is, you know, age 70. What does that look like for me in 10, 15 years? Do I need $1 million? Do I need 2 million? Do I need 5 million? Do I want to stay here in the Bay Area? Do I want to go to Utah? Or do I want to be in Spain? You know, so understanding what their goals are is really how I can kind of work backwards and go through the numbers and say this would look like something that you'd have to pay for so many years, or how we would do this to come across your goals.
Very nice, very nice. And that's one of the things that we always do, and especially in our coaching position and our leadership position within my real estate company, our goals and their goals have to be in alignment, right? And so obviously having that conversation, that initial conversation, is always about what the client's needs are, what their goals are. So obviously for them to be able to help you help them, they have to be clear on what their end game is. They have to be clear on when they want to retire, how much money they actually need, what they would like to do in that retirement. So sitting down and doing their budget, sitting down and understanding that, okay, well, this is the money that I need now to live on. This may be the money that I will need when I do retire, or, you know, when I want to retire. So they have to come to you with some of that clarity already taken care of. And so that way, that call, that first conversation, it's more purposeful, and you're better able to assess what their actual needs are, right?
Yeah, definitely. Yeah, so I have to have a clear picture. I have to know. And, you know, some people have, you know, 100,000 or 120,000 in their bank, and then they don't know what to do with it. So I do, you know, work with annuities as well and say, well, you know, if you put it here, you can earn some money. You can, like you said, you know, you can still take some cash out and have it for your daily needs. But then also let's make this money grow. And so helping them do that is what I love.
Yeah, that's essential. That's one of Khalil and I, we've talked about that a number of times as well. Understanding what that tool is for,
Hmm.
and getting over the mindset that it's not a payment every month. It's not a
Right.
bill that you're paying every month. You're
Yeah,
paying into yourself. You're paying into your future every month. This is money
exactly.
that you're saving, and you're getting a much better rate of return than you would be at a bank or credit union, whatever anybody uses.
Definitely.
Or even that person that you talked about that's 45 and doesn't have a 401k. They got to
Right.
start somewhere, and this is
Yeah,
one of the best tools to utilize.
exactly.
Right, right. So with that, obviously, in light of what's going on right now with the fires, I've worked with a number of clients who, unfortunately, and my condolences and prayers go out to all those that are still suffering from the fires and
Right.
have gone through evacuation and are still in limbo right now.
Hmm.
My family and I, this was our third evacuation. No, excuse me, our
Hmm.
second evacuation in 3 years.
Right.
So I thank God that we didn't have any losses. We had a place to go to. There wasn't any long-term issues. We had a home to come back to. And on the other end of that, I've worked with clients who literally had 5 minutes to get out of their home and lost
Hmm.
everything.
Right.
It's one of my wife's first cousins in Napa. Their whole neighborhood burned down except for their home. So
Right. Wow.
understanding, the areas that we are living in and climate temperatures, climate changes and all that, I know some of the areas that were affected by the fires in 2017
Mhm.
and past that, some of the local insurance companies decided not to uh, provide insurance to some of those residences. I know
Right.
there was a moratorium on insurance at some time during those fires. So so outside of actually being in the fire season, because this year we're actually suffering from fires earlier than we normally do. This is
Right.
what I've
Yeah,
been
this
told.
really
This
isn't fire season right now. It's
right.
coming later, and California's dry. California has
Mhm.
been in drought for many years, and we have a lot of old trees and a lot of residences, residential areas like Los Gatos. There's so many factors that have to deal with the fires. And unfortunately, it's not just farmers or any company, but a lot of the companies, it's basically it's California's on fire all the time,
Right, right. Yeah.
and so we've seen it
North
the
and
most
south.
devastating, most devastating fires in 2018 with Paradise and Santa Rosa, right?
Mhm.
And communities are still rebuilding. There's so many people. I just went out to Santa Rosa probably about 4 months ago and took a picture and posted it on my Facebook page that this person is still rebuilding. They don't even have windows in, and to understand that your house hasn't been able to rebuild for over 3 years, there's some kind of issue there that
Mhm.
was with your homeowners that your agent didn't review with you, or you didn't call and let them know what's going on with your house before the fire, of just updating different things that are going on in your house, so they might have not have had enough to rebuild, and that's why it's probably taking too long.
Right. So
But
what should clients do to prevent that situation?
yeah, so your agent, should actually be calling you. I call my clients every year. And and it doesn't have to be right before renewal. It just, with you have a system, I call my clients, I let them know, hey, do you have any questions or concerns? I break it down per square footage to say, do you feel this is adequate to rebuild? So the agency I took over, the agent had been there for over 20 years. And sometimes you get complacent and everybody's comfortable with that person. I'm the new girl in town, and I say, hey, I'm rattling your cage because the policy that you probably got 30 years ago was when you first had kids,
Mhm.
and it was for mica cabinets or, countertops and linoleum flooring. And I'm sure after all those years, you've hopefully done some updates,
Mhm.
and different things change in the house, right? So you want to have an agent that is proactive, that calls you and touches base with you and say, hey, let's do a review. Let's go over everything, home, auto, everything, and just see what are the changes. If there's nothing, that's great. If your home still has, the linoleum flooring and formica cabinets or countertops, we can leave it like that. But we want to know, what does it cost today per square foot to rebuild your home? And there's a big difference if you're in San Jose versus if you're in Vallejo versus if you're in Los Altos Hills. So we want to make sure that you have enough to rebuild should it happen, and that's why we need to come out every year and talk to you and make
Right.
sure everything's good.
And that's not just based on whatever upgrades they personally do in their homes. That's also cost of rebuilding, because that
Exactly.
changes.
Yeah, so the cost of rebuilding. So if I have to put granite countertops back in, I need to make sure when you talk to a contractor that they know per square footage with
Mhm.
your hardwood floors, with your double pane windows, with all these things that are in that house, that I have enough to rebuild. And so that means getting it out there. Say you're in a rural area in Los Gatos, and it takes a lot to get out there, right?
Mhm.
So maybe the building materials, or just to get out there into the woods, takes a little bit more versus somebody that's right off 880.
Right.
So there's a lot of different factors that you have to deal with in reconstruction costs. And then a lot of people get confused about, why purchase my home, last year for 1.5 million? Why is it only, $300 per square foot, or, 400?
Mhm.
And it's like, there's a big difference. So explaining that, like I said, being thorough and concise and explaining the difference between reconstruction cost and purchase price, two different things.
Right,
So
right. And
yeah,
that's because that land, the land is the hugest difference in that
yeah,
equation, because the cost
exactly.
of building doesn't equate to rebuying the land itself.
No.
It's only the equation of rebuilding the property on that existing land.
Exactly. So it's studs, it's up. It's from the
Mhm.
foundation up. So if you have a slab, foundation, we're gonna build it going up. It
Mhm.
has nothing to do with the land.
Right. So in that scenario, and you may not be able to answer it. It might be too broad of a question,
Mhm.
but the scenario that you gave, that okay, so you're calling your clients every year. They're doing everything they're supposed to do. All the upgrades that they've done, they let you know about it.
Mhm.
Any jewelry they've purchased, they let you know about it.
Right.
Any toys that they may have in the house,
Hmm.
they've let you know about it, and they have the appropriate insurance for that. In a situation like this, with the fires going on, their house, you know, unfortunately burns down to the foundation.
Right.
What does that process look like from there till rebuild?
Yeah. So, we have to put a claim in. We got to
Hmm.
put that
Hmm.
claim in, let them know, it's a total loss. An adjuster will come out because of COVID-19. Everything is virtual, it's touchless. They still may come out, and keep their distance, and take a look at, you know, how damaged it is. And so, because your policy is in place, you've paid your policy, we're gonna say, okay, because you paid your policy, we're actually, we're going to pay what your policy is. So it goes up to the limit. So I'm not in the claims area, but
Okay.
really how it looks like is that you put a claim in, an adjuster comes out, they determine whether it's a total loss, and then they pay up to the policy. And personal property is a little bit different, but of course, if you have the riders for your wife's $10,000 ring that's on a floater, things like that, those will all come into line. So Farmers is a great company. They haven't had any issues where they're not going to pay it.
Mm.
And they've actually extended, in the Santa Rosa fires, they extended the additional living expenses for another year, at that time.
Very nice. Very nice. Yeah, I know it took, because it was so many affected by that fire. I know it took quite a bit of time for all the claims to be taken care of, and all the rebuilds, because
Right, because
one
it wasn't just
contractors
one
were totally
house, right? It
overwhelmed as
was
well. Exactly. It was whole communities.
the whole community gone. Right.
Yeah,
So, and
yeah.
then the good thing about Farmers was that, we didn't nickel and dime anybody. We just said, we're just going to pay out your personal property limit. We didn't
Mhm.
say, how many forks do you have? How many knives do you have? How many corduroy pants do you have? We just
Right.
said, forget it. Just let's do that. And that was specific for that,
Mhm.
predicament. But,
Yeah, I can attest to that. I had clients that were farmers, and that was exactly what they said. It was an easy process. And I'm sure, maybe in the same situation, for any other insurance company, but however, the conversations that I did have, since you did bring that up, they said it was a really, really smooth process.
yeah.
And like I said, it was just more so because it was so many people affected by it. It took a
Mhm.
longer process, for them to rebuild.
Yeah,
Now,
definitely.
in an instance that, like for a total loss situation,
Mhm.
um, does the client, and I'm speaking to this because I know some people that are personally affected by this. Like I said, some clients that are personally affected by this, and so I'm just want to walk through that process, and gain some more clarity to people who may not, understand it at all, may not have been through it, who may be pending, maybe in a situation where now they may find themselves in that situation, in
Right.
that situation, unfortunately. So, if I want to ask questions, that I'm making sure that it gains that clarity. So with that said, in that total loss, does that client have to rebuild? Does that client have to rebuild? Can they take the money and go buy a home? Can they sell that property off? Like what are their options in that total loss situation?
There's a few options. So you can rebuild, you can go purchase a house somewhere else. We will pay up to the limit. If you say you want to remove and relocate to Texas, say your limit was 500,000 to rebuild. Well, you can go purchase another 500,000 home in Texas. Say it's less, say you can get, $350,000 home in Texas. We won't give you the difference. We'll pay that 350,000 so you have a house in Texas. And that's how it works. So you can either rebuild, you can relocate, or you can, just again move out, but we will pay up to the limit or whatever is lower.
Okay, great. Yeah, that obviously, because I know some clients that they didn't want to rebuild, they didn't want to be in the same situation as they were, year after year, in high fire hazard areas.
High fire zone, yeah.
Right. So, and I know that there was a moratorium after those 2018 fires on a lot of the local insurance companies. Now, are there any areas that, say, Farmers doesn't insure because of that, because of the high fire hazard zones?
So a lot of California is in a high fire zone, right? So what Farmers is actually doing, if it's really like a high fire zone that we normally don't write, we'll actually back it with the California Fair Plan. And so we're one of the few bigger insurance companies that will do that. And so what that means is that California Fair Plan will cover the policy for just fire, any fire damage. And then Farmers will cover it for, theft and water damage and any other damage besides that that's listed in the policy. So, but we're just
it's a piggyback. So it's back to
piggyback.
Right, because here in California you have to have insurance. California has to make sure that you're insured. Exactly. So I wanted to get that out there. So if you are in a rural area and your local insurance company doesn't provide you insurance because you are in a much higher fire rated zone, and I know one of the criteria I've heard I've been told is that if the nearest fire department is over 9 miles away, or it's 9 minutes or something like that, about 9 miles away, and it's hard to get to because of switchbacks, because of the roads and whatnot. So yes, so state of California does have insurance that would cover your home, and then like Sophia mentioned, you could partner up with Farmers to take care of the remaining insurance coverages.
Exactly. So it's not that you won't have insurance, but we'll work with you and get that California Fair Plan to cover the fire damage for your home. Great.
Now, outside of you did speak of other opportunities in that Farmers offers. So obviously outside of the fire insurance situations, somebody that's coming to you and they don't have any investments, they don't have anything going on right now. They don't, that scenario you gave with the person doesn't have the 401k. And they do want to retire, say 65. I know people are living older now, so we'll take it up to 70. They want to, start traveling and have some money for traveling and taking care of the home that they're in. So what, and say they may be at a job, they're making $100,000 a year. So what investment strategies would you speak to that with that goal in mind?
Yeah, so one of the plans that I really like is, because I'm on live right now, of course I'm going to forget everything that's in my head.
Well, I'm not asking you these to trip you up.
It's an index universal policy that I really like. And it's, putting your money in, and especially, for a lot of clients that are here in the Bay Area that have a bigger net worth or have a bigger amount of income, that they can kind of shovel it in there. That's where I really like having my clients look at a program like that, and policy is where there's a maximum they can put in as a guideline, right? And they can kind of just shovel their money, and then it's based off the Russell and the index. So if that money grows, was it Russell 5,000 or the Russell, you're gonna mess me up, Russell 200, and I can't think because it's gone. And normally,
okay, so that's an investment index.
It's an index investment, right? And so there's go up to a certain percentage, and it's based off the stocks. So if it tanks and it goes down negative 12%, you're actually at a floor of 0. So you don't lose any money, you just won't gain any money. And so it's a safer place to put it, and grow some money. So we can, like I said, we go backwards and we say, okay, by the age of 70, you know, and you're 45, we got this many years, and this is the goal that you want, then this is how much we can put in there. And by these kind of, you know, dates, like, you know, when you're 50 or you're 55, we can look at that and we can say, this is how much you should potentially earn. So, you know, I like that. And if they already have cash, you know, and they want to, you know, putting in an annuity is the best thing too, because, you know, maybe grandma has, you know, 180,000 and she wants to leave it to her grandchildren, but it's just sitting in the bank. It's really not making anything, right? And she's still using her, yeah, she's still pulling from her Social Security. And sometimes she takes, you know, a couple hundred here and a couple hundred there out of her, her money that's in the bank. You know, we want to show her that this is how you can use, you know, maybe 70,000 out of it for the next 5 years, for your lifelong, you know, whatever you want to do with the grandkids. And then here, let's put the rest of it into annuity that in another 5-10 years, it will grow. And then, you know, when you pass away, this will go on to, you know, the grandkids. But the thing I really like about the, you know, the life policy is that you're always transferring, you can transfer your wealth and there's no tax implications to the beneficiaries. So a lot of people, a lot of wealthy people have been using that for years. And again, Black and brown communities don't know about that. And we didn't know, you know, we're just like, okay, sell the house or you take the house, you know, this is all we got. But, you know, if we've been working for 30, 40 years and we have really nothing to show for it, we didn't know what to do with our money. We want to make sure that, you know, even if you're at 45 or 50 and something happens to you and you've invested for 10, 15 years, you can still leave a legacy for your family. And you can say, hey, for my grandchildren that are coming, you know, I want to make sure that they have money to go to college, make sure that there's 20,000 for each of them. And then they will, you know, with their working years, will be able to put that aside for them and grow their money.
Yeah, and that's very true. You touched on a number of topics there, and one that I want to address, and one of our first shows was, you know, mindset. And in that mindset shift, you know, you start to see things differently. You start to have different conversations. Right. So part of our mission statement is to change the narrative, right? And so being comfortable having conversations about wealth building, about, you know, investment strategies. You know, for years and generations, that was always a stigma. You don't ask somebody how much money they make. You don't ask somebody, you know, what are they going to do with their money when they pass? You know, you don't ask somebody, and these are family members. You don't ask your family, you know, if they have a will.
And I have to ask clients about this. You know?
Exactly.
If they don't want to tell me how much money they have in the bank or 401k investments, and I'm like, trust me, I'm your, you know, I'm looking out for you, making sure you're protected well.
Right, and that's the thing, is like we have to get comfortable having these conversations. Yeah. Because if we don't have these conversations, then we don't know where we stand and we don't know how to get into a better position, right? Exactly. Clarity is power. And without that clarity, you don't know which way to go. You don't know what your best strategies are. You don't know, you can have a goal of wanting to do this, wanting to give this amount to your grandkids, wanting to take care of this, blah, blah, blah. But without having that conversation and being comfortable having that conversation, you don't know where to start and where to make that happen.
Exactly.
So that's essential, is being able to change that mindset shift and change that narrative to have these conversations.
Definitely. And, you know, when people think of insurance, they just think about home or auto and that's it. They don't understand that we know there's a lot more, you know, investment tools, and there's a lot more products that we have that we can help you with this. And, you know, back in the day, what brings it to me, you know, is that, you know, my parents didn't have life insurance. We all had to divvy up money and make sure everything was taken care of. You know, we weren't left anything. And, you know, when my dad passed away, we were going through his stuff, and he was an accountant. And so he kept, you know, ledgers and all these things. And I found a checkbook register from the 60s that he had like over $1,000 in his savings account. And I was like, that's big money back then. You know, why didn't he use that to invest? Why didn't he buy a house? Why didn't he do something with this? And either it was for that he just didn't know, you know, back then, or whatever it was. But here we are.
More than likely, he just didn't know.
Yeah, he most likely didn't know. And then that stigma of a lot of Black and brown communities, we don't talk about money. You know, I never knew how much the mortgage was growing up. You know, I didn't know we had, you know, we couldn't buy milk or whatever it was, you know.
Mm-hmm.
We didn't know all those kind of things as children. But even as we got older, when my dad passed away, and I asked my mom, she was tight-lipped about everything too. She didn't tell us anything until she passed away. Then we found out a lot more stuff. And I was in insurance. You could have told me this stuff. I would have been able to do this or do that, or, you know, but
Right.
you know, that's the problem, is they don't want to tell us.
Yeah,
So.
and it's unfortunate. You said, I mean, you hit it right on the, you know, right on the head of the nail. It's unfortunate. We see even now, and it's becoming, I wouldn't say a norm, but I see it so too often on Facebook. You know, GoFundMe accounts
Right.
for somebody who's passed to take care of their funeral. And that's the thing, is that insurance is not just for those situations. However, it's essential that you do have insurance for that, right? You don't want to leave a bill on to your family members to take care of, or for them to scrounge together to get you know, to take care of. So that's one. And then two, I mean, in order to put yourself in a better position, you know, that's the whole point of us, you know, together, Global Empowerment Team. We're on Facebook, we're on YouTube. You know, we have these calls twice a week on Thursdays at 6, Sundays at 2:30. All of our guests provide a wealth of value, and having conversations like this around building wealth, around putting yourself in a better position, around, you know, leaving a legacy for your children or for your loved ones, you know, being able to map out your own destiny, you know, being able to obtain your own goals. And so, and that's why, you know, Khalil and I, that's why we established Global Empowerment Team, so that way we can educate, you know, those that we can come across, and that way we can help them change the narrative in their families. So that way they can get comfortable being uncomfortable, get comfortable having conversations like this, where it's the norm, you know, where you can go to your family members, you can go to your loved ones, you can go to those in your circle and have these conversations, because iron sharpens iron. We're making each other better. We want to do better. We want to make all those around us be in a better position. So it's essential that you have these conversations. It's essential that you have your insurances in place. You know, if it does come to a situation, unfortunately, where you do need to use it, that's what it's there for. However, on the flip side of that, you can use it while you're still living. You could use it while you're still here to invest, to put yourself in a better position, to build wealth, to take care of you and your family. So, you know, if you do have questions, you do want to put yourself in a better position, you do want to build your wealth and start thinking about what your legacy is going to look like. Reach out to us at Global Empowerment Team, reach out to Sophia. She is, you know, there. She's been in the business for years. She's very knowledgeable. You see here, she's providing a wealth of information, and being able to have that conversation, and don't feel ashamed at where you start at. Everybody has to start from somewhere, right? So everybody doesn't have that 401k like she mentioned. Everybody doesn't have, you know, a couple $100,000 in the bank. However, if you have some income, you have to start somewhere. Yeah. You know, and it's better than putting $5, you know, a couple dollars in the bank, because now, you know, banks don't want to give you anything for, you know, for the money that you give them, right?
They never have, right? And we need to be smarter about it, and we need to educate our community, and we need to understand that we're here to help each other. And we want to see you grow and be profitable and build your wealth, right? That brings me joy, because especially, like I said, coming from, you know, East Side San Jose, growing up there in, you know, the 70s through the 90s, you know, that wasn't the greatest place to be, like in some parts of Oakland. So we didn't know that information. And for me to be able to give that and see this next generation that's able to grow, it makes me just really happy about that.
I'm glad you mentioned that. I'm glad you mentioned your background and where you came from. You know, we're approachable. You know, we're approachable people. You know, I came from San Francisco. You know, you know, Sophia, she just laid out where she came from. We're approachable people. You know, we're here to have conversations and to help you. So, I mean, and understanding that, you know, there are doors that can open for you, you know, and being able to, like I said, put yourself in a better position. You know, why not? You know, why wouldn't you want to do that?
Right. And talk to people who are licensed and know their niche and know their business. Don't get this information from your next door neighbor's cousin, sister's wife, you know, that doesn't know, they just heard it on the news or whatever. You know, go out and inform yourself, do the research and find somebody in your area. You know, like you said, reach out to us and ask those questions. You know, I give free reviews. Even if you're not with me, you don't even have to stay with me or be with me. I will look at your policies and give you suggestions and say, hey, if I can't help you, I'm still going to show you how to help yourself, and go back to your agent. And if not, you know, come back to me, or I'll find you somebody that you do like, if it's not me. But just to know, just to open that door of that conversation about your auto, about your home, about your life insurance, about your retirement needs, or whatever you're gonna do, because we need to understand that this is a way different world that we're living in. It's not how we grew up. It's always going to change, and it's most likely going to be a lot more different now than what anybody has ever been used to. And we need to inform ourselves.
I'm glad you mentioned that also. So obviously with COVID, there has been a number of changes in the real estate world and how real estate is now being transacted. It's a very, very busy time right now. There are a lot of buyers with really low inventory, especially here in California. So, and then also with the impact of COVID, the pandemic, there have been a lot of changes on how sales are transacted, how people are viewing properties, and then also with contracts. What changes in the insurance world have there been since the onset of COVID?
So a lot of it, of course, has been auto coverage, right? A lot of people are saying, hey, I've been stuck at my house since March. I don't drive it. I barely roll it around and go to the grocery store. My job says we're just going to stay at home and work. I don't have to take that commute anymore. So the biggest change that I've seen is basically clients talking about their annual mileage. So, and, but the thing is that everybody is in a pinch too, right?
Right.
So whether you lost your job and you're on unemployment, or, there's different things going on. So every household is different. But my main thing that I let all my clients know is, sure, we can go ahead and change that mileage. But, once it picks up, it's going to come back again. So we want to even it out, because it's an annual type of mileage, right? We're not just looking at 3-4 months out of the year and then changing it around. And then the biggest thing also I want them to know is that there's still liability issues. So just because we want to save some money, first go talk to Comcast, go talk to, the other bills that you have in the house that you can reduce. Don't take the liability off, or not liability off, but just don't reduce it because you're trying to save some money. There's different ways we can go about it, because say you go out there and you do get in an accident, people are still driving, and they're driving a lot faster than they were before. Right? Because the roads are a little bit more clear.
Right.
So we're speeding more, right? Because we got an open freeway. But if you do crash into somebody, and for you to save, another $30 out of 6 months or whatever it is, do you want to take that responsibility of having that liability issue on your shoulder, especially while you're out of work? And if somebody sues you, how are you going to pay for that? So don't look at, the insurance as your first thing to go to on tightening your budget. Look at the food, or look at the lights, or look at, other thing. And like I said, I do financial literacy classes too. And I want people to understand that, insurance is not a bill, and insurance is protecting your assets. So when you have assets, when you own a home, you have equity. When you still have that job at Google, even if you're working from home, you still have an income that you want to protect. And we don't want to cut any liability coverages.
You hit it right. That is understanding, the mindset, what I mentioned earlier is, when you're investing in yourself, it's not a bill. You're investing in yourself. You're making sure that you're taken care of. And like you said, your assets that you've worked hard to obtain are taken care of. And then also you mentioned, the fact that people are now working from home, that a lot of especially in tech industry, a lot of entrepreneurs, especially like, for instance, myself, I'm working more out of the home now than I have been over the last couple, 3-4 years. So with that said, what type of insurance? Because now that you have home, people that are at home all day long now, their businesses now run out of their home. They've they've taken an office in their house and established it solely as their workspace. Does that change the insurance, and what type of insurance would they need to make sure that they're protected and their home is protected in that situation? So and their business as well.
Right. So the biggest thing that I've kind of seen, just a little bit side off of that, is that when you had a career, say you were an attorney, and you had to either be laid off, or they just kind of closed shop because they're not doing anything right now. But you as an attorney are able to still, be self-employed, or have your own business. I've seen a lot more people come in where they need coverages for themselves, where they're now becoming entrepreneurs, or they're just having their own business starting up. So having that errors and omissions or their own professional liability coverage is something that I do business insurance as well. So talking to them about that, because, we've all had to reinvent ourselves and pivot and change and just do a lot of workarounds, right? With our income. So that's where I've seen the most changes. As far as working from your home, having your home office, say if your laptop and your property for your business that you have to run is a lot more, say this laptop is something I've invested in, you want to tell your agent about that and say, hey, it's a $25,000 laptop. I need extra coverage for this. How is this going to work? Your homeowners does cover your personal property. There are, with every policy, it's a little different and every situation's different. So I haven't done a lot of changes on those, but the more I've seen is that people are becoming entrepreneurs and they have questions about, how do I cover my business that I'm starting? And now that I'm no longer working for this company, I'm going to do this for myself and I need some coverage. What do I need? Those are the conversations I'm mainly having.
And what is that process like? Like, for instance, that scenario you gave, let's say the lawyer or a startup company now is starting out of their home. And they've already done all their business licensing. They're maybe an S corp or whatever, C corp. They're a corporation. They have LLC or corporation behind their name, and their sole premises is inside their home. So what does that conversation look like with insurance?
So every business is different and every risk is different. So it depends, through farmers, what we cover and how we'll cover that. So it's really hard to say exactly, how it's going to work because, like I said, every business is different. So the main thing is, once you have all your business entities ready to go and what you think what your estimated revenue is going to be, those kind of questions, we'll do an application over the phone. And sometimes it's not that we can just get a quote at the same time. There's some more information that they have to kind of go back and get. And then I just send it to the underwriter, and then it's up to the underwriter to let me know what the risk, if this is something they'll write or not. So times are different. Farmers has, really adapted. They're always changing. They're understanding that the world is different and things like this are happening. Now we're going to do it from home. You don't always have to have a storefront. You're not going to have employees. We don't know how much our estimated revenue is going to be because we just don't know. Things like this. And did you have any background doing this before? How many years experience? Those kind of questions that we have to ask. And we need to understand how are we going to write these policies. So farmers is understanding, okay, maybe you didn't do this before, or now you think, you kind of did it on the side there. And now you really want to turn into a full-time business. We're going to look at all these different scenarios and make a light out of that.
Yeah, that's essential. You made a very valid point because, people now they have a little bit more time, they're saving time on commute time, versus where they're spending 4 hours on average, 4 hours a day on the road. So now they have all this time. They are starting starting their own businesses and it's a wide array of different types of businesses. So yeah, definitely as an insurance company, you do have to be flexible. And so, I commend you and farmers for, having that flexibility and, being able to cover a number of different types of businesses that are now starting. Now with that said, has technology changed for farmers? Or so how would be the best way to get in contact with you? Can you do an online application? Is everything virtual now?
No.
Are they having appraisers coming out, or all that's virtual as well now too?
A lot of it's virtual, a lot of it, we will find this information over the internet about your business and things like that. We'll look at your Facebook page, we'll look at Instagram, we'll do a whole bunch of things, and understand how your business is running and make sure that that's the type of client that we want to insure, correct? And the business. So we're out there, we're, like I said, I wrote a policy for a client that's out in Santa Rosa that has a clothing line. Not his clothing line, but he has stuff for Fizz, so, well, I think it's a Lil Fizz, but anyway,
okay.
So,
who was that? Is that a rapper?
Yeah.
Was that, oh, okay. Sorry, Lil Fizz.
I'm a little old, So, we had to check out his clothing line. The underwriters has, checked out his Instagram page, his Facebook page, all these things of like, oh, what kind of clothes does he have? Is he really selling here at the, at the storefront? And how is this going to work? and then that's the things we have to explain. Yeah, he does have a storefront. He got into a lease in March. He wasn't able to open up the business until, probably just like last month, I believe. But even to do like normal type of things like your grand openings, those had to stop, all these things. So we look at all that. The easiest way is, of course, I'm on all social media platforms. I'm on LinkedIn. You can just Google Farmer's Agent Sophia Poni. You can find me and reach out to me. The applications, I take over the phone. We do Zoom meetings just like this with my reviews. Everything's virtual. I still have, sometimes clients do want to come in. Of course, we're, COVID-19 prepared with our mask and 6 feet away and all those things that, we're supposed to do. But, traffic has gone down on that. But even before, we were doing Zoom meetings with our reviews, and, it's just a little bit better sometimes because a lot of my clients are down in San Jose. I'm here in the, in Union City. We can't make it because of work schedules for them. So Zoom meetings are the easiest.
Okay, great. And obviously Farmers is nationwide, so everybody knows that there's a local agent, and however they may not be as great as Sophia. No, I'm sure they're great.
Yeah, I'm licensed in the state of California, so whether you're in Redding or you're in San Diego, I'll take care of you.
Okay. So that's north and south. Everybody in California,
right.
Reach out to Sophia.
That's right.
So yeah, so definitely. So I wanted to, thank you again for making the time, for being on the show. Once again, you provided a wealth of information. And if our audience, Sophia's audience, if anyone has any questions around your insurance, if you have questions about, do you have enough coverage? Are you safe? Are all your assets taken care of? If you have questions around, building your wealth and making sure that your wealth is protected, Sophia is definitely the person to reach out to. She will sit down with you and assess where you're at and where you want to go and reverse engineer that to where, to what you need to do on a day-to-day basis. So Sophia, once again, thank you so much. This is the Global Empowerment Team. We're on Facebook, we're on YouTube. Go to our YouTube channel. All our videos are posted on YouTube channel. This link will be posted on Facebook, so you can go to YouTube later. Hit the subscribe button, give us a thumbs up. If there are any topics out there that you want to discuss here on the show, if there's somebody that you think that we need to have here on the show, let us know, reach out to us, and we reach out to them and we'll make it happen. I want to thank you again for everybody for making the time to see us today and show up on the show. Everybody take care. Sophia, you enjoy the rest of your day. Stay blessed.
You too.
Definitely. Talk soon.
Right. Okay, bye.